Welcome to the January 8th, 2018 Advance Report for McGowan Group Asset Management clients and NetWorthRadio.com listeners. Wow, bam, the year is off to an amazing start. Two areas we're going to focus on today. How do we address the equity prices, Dow hitting 25,000 for the first time in history, an amazing rally from the election through today. It could be that there is another 20% to go in this rally. Why? You have increased after-tax earnings for the S&P 500 with tax reform to a near 60 to 70% gain since the election. It's an absolutely amazing explosion in earnings, and it means that somewhere in the next 20% during 2018, you want to be taking some money off the table. The technology rally this week was absolutely amazing, but it doesn't last forever. Look at the results so far this year, 2% in the first week, the NASDAQ 3%, off to a great start for the U.S. equity markets. As January goes, so goes the rest of the year, according to the Stock Traders Almanac, and that is a good omen for the year. We will, at some point this year, I believe, have a correction driven by some of the technology names. It just takes one or two disappointments to deflate the FANGs trade, the Facebook, Amazon, Apple, Netflix, and Google, which has been powering this rally. Amazon at 400 times earnings, or just about there, is probably a little bit pricey. So it's a good time to start taking some things off the table. What should we be putting on for 2018? I've got the evidence right here. Your white line is actually oil prices. There's the supply-driven collapse that we saw in 2014, the demand-driven collapse when the recession hit. Now look at this $27 low. Oil this week hit $62. Oh my gosh. Now the green is actually the pipelines. Notice the pipelines corrected while oil came up, right? And they just met here. Now they're moving in tandem again. We've had a tremendous initial gain from plugging in the infrastructure that supports the shale revolution, which also explains this collapse. This could be one of the best opportunities for income investors to make money before inflation hits, potentially at the end of 2018. Why did oil collapse? Well, you can see the shale revolution right here, the Permian Basin being the center point there. We've also got the other shale developments, including natural gas coming from East Texas here and Louisiana. Well, let's look at the infrastructure, because we want to own the toll booths, the pipelines that benefit from liquid natural gas exportation, and a booming exportation of oil, which was surprising. All right, here, the oil pipelines, you can see this valuable Gulf infrastructure right here. You want to own the tollway, ka-ching, 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 as these volumes have been improving coming out of the Permian and other shale developments. This is natural gas. Notice again the large infrastructure here in the Gulf. The Permian could be the world's most economically viable oil field, and the reason being break-even wellhead prices have come down, but the infrastructure for light, sweet West Texas Intermediate crude is absolutely, I believe, the best in the world, and those values over a 5 to 10 year period could double on top of the cash flow. There is price risk in those. I showed you the collapse that they went through over 3 years. But in this case, it could be the best inflation hedge. NetWorthRadio.com, you can get the full program. Alex and I dive into a much more detailed analysis, and at times we rise to a level of jocularity that I think you'll enjoy. I'm Spencer McGowan, President, McGowan Group Asset Management. Thank you for tuning in to this year's Advance Report.